Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for April 12th, 2020. And this is a very special video since today is Easter Sunday for a lot of people. So if you are celebrating the Easter holiday today, happy Easter to you. For those of you celebrating Easter next weekend, happy Easter to you next weekend. But I hope you guys are enjoying the long weekend at home, right? I know today is going to be really interesting for a lot of people. We're doing actually a Zoom meeting with all of our family, and we're all eating together in different locations. So it's an interesting holiday this season, for sure. Anyway, I hope you guys are being safe and healthy and at home and washing your hands. Before I get started, I'd have to mention if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. And when you try it out, make sure you download the mobile app on your phone because you're going to get the premium version. No matter if you decide to do the premium or light version, you're going to be able to try out the premium version. And make sure you go to the go to the chat room once you're there trying us out, so this way you can be chatting with us all and everything else. I'm just going to move the data flash out of the way. That's our real-time news launching service. When news comes out, you get it instantaneously. It's through here. I'm going to move that out of the way. It's just one of the many features that are part of ForexAnalytix that you'll get aside from the analysis. There's so many tools inside of this platform. So anyway, if I sound a little congested, it's allergy season. This time of the year is always so tough for me. I always wait till it's 100 degrees here in Phoenix, because once it's 100 degrees, all the allergies are gone. Everything dies basically as far as plant life. So my allergies finally clear up usually when it gets warm. But right now it's not. So my allergies are in full swing. All right, let's talk about a few things that are happening that are pretty important as far as I'm concerned, and they all kind of tie together. So if you are, first and foremost, if you're looking at like the stock market, and I'm going to take a really good look at the S&P here. You'll notice these are charts that are uploaded, and I think Steve did this analysis for the S&P this weekend, and you can read his analysis here. But I'm going to give you my take on the S&P because I think that's the elephant in the room right now, which is going to drive a lot of price action for a lot of different currencies. The S&P is at the 50% retracement. Let's knock that out of the way. 50% of the retracement from the all-time high to the recent low, we're basically at the 50% retracement. And I know I've said that at least 10 times. We're also challenging some pretty key previous support. If you look at this area here from, let me get that magnet off really quick. So if you're looking from the 2780 to the, comes in right here at 2850, we're in between. You see all these lows right through here. You can see them right through here and here. Okay, we're up against that area. Now what else you are going to probably notice with the S&P is we have a nice AB equals CD move developing. All right, AB, this is A, B, C, D takes us about to roughly 2900, and bigger resistance is the 2930 level, which is the 618 retracement of the entire move. I would venture to guess that we are going to be, the problem is everybody's looking at the exact same thing that we're looking at right now, and when everybody's looking at these areas, coming up short is very logical, because we're all looking at the same thing. I think everybody and their mothers, brothers, uncles, nephews, sisters, cousin is probably looking at a move towards 2900. So we're to fall short of 2900 or 2930 would make perfect sense to me, especially with this AB equals CD move. I would venture to guess that we stall probably somewhere around the 2850 level. which is that previous support. You can see, it's previous support, current resistance, a lot of support over here. I think we're going to fall short and reach towards the, towards this, let's just call it 2850 to 2880 roughly. I think that's where we're going. Now, I have to also state if you talk about the global economy, I mean, we've been on partial, if not full lockdown for a lot of the world for an extended period of time. And one would argue that the stock market is not the economy and the economy is not the stock market. I would agree with that to an extent. But this has been such a shock for the global economy. I do expect that stocks are going to run into some sort of resistance up at these levels. Whether or not we're heading to new lows or, I personally, I still feel that we will challenge these lows, if not head lower. Because I think what we're going to find out is, unemployment's not going to bounce back as quickly as possible or as quickly as a lot of people anticipate. And I believe that, demand is, consumption demand is not going to be as robust as people believe because I think unemployment's going to remain relatively high. Is that going to be enough to, to take us down to new lows, or will we stop short of that? Is to be seen, and I think that the market is looking very optimistic right now because of what's happening with the coronavirus. But it's more than just people going back to work or the cases and the deaths plateauing, if not peaking in the apex and moving lower. I believe that a lot of that has already been priced into the market, and thank God we're it seems like we're there. And I'm hoping for all of us, for humankind, that we're near, the peak, and we start coming down in cases and deaths. It's obviously I'm trying to be an optimist here, but from the economy standpoint, I think that we have to look through a little bit different lens and understand the gravity of the situation that we're dealing with and try to be a little bit more realistic. All right. So, with that being said, with the S&P, so let me just, sum it up. I'm not as optimistic at current levels, and I don't believe that, we're still getting this V-shaped recovery. I still think that we're going to be trudging along for quite some time. Whether we hit new lows or not is to be seen, but I think that we are going to be approaching some really critical levels of resistance that you're going to have to play against. And the question for FX traders is how are we going to respond in currencies? And one of the key components, in my opinion, is going to be the Aussie dollar. And you'll see here in the ForexAnalytix analysis here. I believe this is a very realistic expectation with the Aussie, is we're approaching some pretty key levels of resistance around the 64.50 level, which is a 618 retracement of this entire move. All right. Now, we're not too far away from there. We're only, roughly 100 pips away from these levels, and this is also previous support. And I think that the Aussie is going to start to struggle. Now, how you decide to play the Aussie, whether it's straight out Aussie short or maybe through a cross rate, is up to you. But I look at currencies like let's look at the Euro Aussie really quick. Bear with me really fast here. Here's the Euro Aussie, and you'll notice the Euro Aussie is coming into, in my opinion, some very big confluence of support here. So if you look at the previous long-term channel, and I'm on a 4-hour chart, I should probably go to a daily chart. Previous long-term channel, we've almost retraced to about 170, which I think 170 is going to offer a lot of support for this pair, anywhere between 169 and 170. And you'll notice it's channel support. There's an 88% retracement. There's a 78% retracement down here. Previous resistance comes in around 171. So this whole area is probably going to offer a lot of support. So if you want to try, Euro Aussie might be a way. Obviously you could trade the Aussie dollar as well, and look to be a seller up here as I just was discussing this this whole area. And even if you take this last move, you're talking a 78% retracement. It comes up around the same area, 64.30 to 64.50 roughly. And I think the Aussie is going to be really a good setup for a possible short here. I know a lot of you guys are thinking, well, how this is a bull flag pattern. It is, but that doesn't mean we're not going to get a reaction from here. Ultimately, we may get something that looks like this, as we complete, some longer term flag pattern, that looks like that. We might eventually get up here, but I'm talking really over the next, week or the next couple of days, with what we're going to do with the Aussie. All right. Now, one of the currency pairs that's really on my radar is one of the laggers, is the euro dollar. Now, if you've been watching the F.A.C.E webinar every day, which is free for those of you that are not currently tuning in, the F.A.C.E webinar is hosted by Dale Pinkert, Forex Stop Hunter. He's known on Twitter, and if you follow me on Twitter, I tweet the link out in the mornings, so you can log in and listen in. And matter of fact, in the description of this video, you'll find a link to subscribe to the F.A.C.E webinar, so you can listen to it every day. One of the things that I've been looking at with the euro dollar is obviously this triangle pattern that you see here. Okay. But more importantly is what I feel is a Gartley pattern that's developed, that is developing, which would be, here's A, here's B, or excuse me, that's A, here's B, C, and D is going to be up here. Whether it's the 127% extension or 161% extension is to be seen. Now, whenever I think this is what's going to happen, or I project that's what's going to happen, I have to imagine in my mind what's going to get it there. And obviously, if stocks continue to grind higher, that's it's going to keep the dollar under pressure. But really, is what else could spur this movement? Because I'm also thinking if stocks actually head lower, and we see the S&P move lower, where how's that going to respond? Are we going to see dollar strength come back in because of this dollar demand that has been prevalent when stocks have gone down? It could, but remember, the Fed's done a lot of the dirty work to weaken the dollar. On top of that, as you guys may have known from the last few trading sessions, there's been a talk of a European Corona bond, or a Euro bond, basically, that's backed by the Eurozone members. There's a few other mechanisms and programs that they want to do, but there's been a lot of contention about doing an actual Euro bond for the entire Eurozone. And actually, even going into the weekend, there were some talks from the Italian Prime Minister that basically wants some more assurances about this Euro bond, and feels that has to get done. Look, if that gets pushed through over the course of the next week, seeing the euro dollar trade up towards the 113, 114 is, in my opinion, would be a given, because that shows that the Eurozone has really come together as a fiscal union to support the Eurozone economy. Now, and actually, I feel that a move to 114 would be actually, or 113, excuse me, would be possible, and we could even surpass that quite a bit. One of the things that's held back the euro dollar for so many years is the lack of fiscal unity amongst the Eurozone members. So to have some sort of Eurobond actually come to fruition would be quite huge. To get Germany to bite off on something like that, and France to bite off on something like that has been, it's, I think, some of the, and other countries too. I believe Austria. There's a few countries that really opposed this, but if it does happen, that is definitely something that could push the euro dollar way, a lot higher than it currently is. But technically, I see that if we start breaking, and let me take that back and put it back over here towards, maybe a more realistic expectation, which would be around the 1250 level. What I'm looking for at this stage is if we breach this 50% retracement, you'll notice that I have alarms set up at the 10960 level for myself, my own personal knowledge here. I believe if we start getting past the 10960 and definitely above 110, that would make me feel confident that we are heading up towards 11250, maybe 11380, and maybe even beyond that. But you have to understand what's driving it at that point in time. And like I said, if it is there's news of a euro bond or a krona bond coming to fruition, I think that the euro dollar could really extend its gains well beyond what I'm showing you here. All right, so that's something it's really on my radar right now, and it's interesting when you see these trades develop, as they're developing and what actually drives them to where they ultimately go. There's usually a macro backdrop behind that's doing it. I can see the potential, but we're going to have to see the price action really tell us that's what's happening as well. All right. Now, there's obviously a lot of other things that are happening this weekend, are happening. Really great piece of news. Boris Johnson, the UK Prime Minister, he has been released from. I have to go back, and I may be saying this wrong. I know he's been out of the ICU, and I believe he's been discharged from the hospital. So that's great. Now, as far as the cable goes, we have this bull flag pattern that is developed. I think the cable's knocking its head up against this 125.10 level, but we already knew that Boris Johnson's on the mend, so I don't think that is going to be a driver that drives the cable higher at this point. What's going to drive the cable higher at this point is probably dollar weakness, probably through the euro. I mean, if the euro starts really making a move, it's going to drag the cable kicking and screaming higher as well. All right. There's so much more set up with other currencies and with the yen, but I'm not going to spend the time today. For tomorrow on the F.A.C.E webinar on Monday, I will be discussing all the majors. So I'll look forward to seeing you guys and gals there. So if you feel that this video has been beneficial to you and you're watching us on YouTube, make sure you give us a thumbs up. Always makes us all feel good, especially, hey, it's Easter Sunday. I'm trying to get this video in before my kids get up and they go searching for eggs and we go start making breakfast, and I'm doing this for you, and so is the rest of the team. So give us a thumbs up, and I hope you guys have a wonderful holiday with your family. Hopefully you are able to connect via a phone or Zoom or FaceTime or Microsoft Teams, however you are connecting. I hope you guys are able to connect with your family, and let's all be thankful that we're still here and our loved ones are still here with us. So you guys have a wonderful holiday. I will see you tomorrow morning on the F.A.C.E webinar, and my name is Blake Morrow with ForexAnalytix. We'll talk to you soon.